Every month, millions of Americans rely on Social Security benefits, whether it's retirement checks, SSDI, or SSI, to pay for housing, food, and health care. But what many people don't realize is that there are specific situations where the Social Security Administration, also known as the SSA, can legally stop your benefits immediately. Sometimes it happens after a major life change, sometimes because of a simple oversight, and other times because of fraud or noncompliance. Losing your check, even for a short period, can put you in a financial crisis, so knowing these rules is critical. That's why in today's video, we're going to walk through the biggest reasons your benefits might be cut off, with clear examples, rules, and facts you can use to protect yourself. This topic actually came in from a subscriber, and I always appreciate when you share what matters most to you. If you have your own question, or want me to cover a specific Social Security topic, drop it in the comments because I do read everyone. And if you find this information helpful, don't forget to hit the like button and subscribe to Social Security Post so you never miss another important update. Now let's break down the situations where your Social Security benefits can be stopped and what you need to do to avoid it. When a Social Security beneficiary passes away, the law requires the SSA to stop their benefits immediately. Payments are not transferable and cannot continue to flow into a bank account after death. In many cases, funeral homes will notify the SSA, but families should still call directly to ensure records are updated. If payments continue by mistake, they must be returned. Using those funds, even temporarily, is considered fraud. The SSA has dedicated units that work with banks to identify and recover improper payments, so continuing to access them is extremely risky. Unfortunately, many fraud cases involve people using the benefits of deceased relatives. A recent example from Massachusetts highlighted this when a woman was caught stealing over $61,000 in benefits that belonged to someone who had died years earlier. She now faces sentencing in federal court with penalties that could include prison time and massive fines. The lesson here is clear. As soon as the beneficiary dies, notify the SSA, close, or update any accounts tied to the benefits, and never assume you can use those payments without consequence. Fraud is one of the fastest ways to lose your Social Security benefits permanently. This includes forging checks, misusing a debit card tied to a deceased person, selling or abusing Social Security numbers, and even impersonating SSA employees. Once the Office of Inspector General, known as OIG, proves fraud, your benefits can be stopped immediately. The penalties don't stop there. You may also face criminal prosecution, restitution orders, and years in prison. SSA takes these cases very seriously, and they investigate thousands every year. These investigations often involve undercover work by cooperative disability investigation units, or CDI teams, that track suspicious activity. They may interview neighbors, visit workplaces, or monitor accounts. Many people think they can slip through unnoticed, but eventually these patterns get caught. Even if you take just a few payments you're not entitled to, the government will classify it as theft of federal funds. If you receive money that doesn't belong to you, the only safe move is to report it right away and follow SSA's instructions on repayment. One of the lesser-known ways benefits get stopped is when beneficiaries fail to respond to SSA notices. The SSA regularly sends letters requesting forms, updated information, or confirmation of status. If those requests are ignored, the agency may assume you are no longer eligible and suspend your benefits. At first, this may mean a partial reduction, but eventually the checks can stop altogether. Communication is the key to keeping benefits flowing. Recent policy changes also show how important cooperation is. In 2024, SSA reduced overpayment withholdings to 10% of monthly benefits to help people manage debt. But by 2025, they announced they would resume withholding up to 100% for new Social Security overpayments. SSI remained at the lower rate. If you get an overpayment letter and don't respond, the SSA may take as much as your entire check. Instead of ignoring it, always contact SSA, request a lower withholding rate, or file an appeal or waiver if you believe the debt isn't your fault. Another reason benefits get suspended is failure to provide required documents. The SSA frequently requests medical records, financial statements, or proof of income. If you ignore these requests, your benefits may be reduced or stopped. The same applies to continuing disability reviews, also known as CDRS, which are used to confirm whether you remain disabled. Not returning these forms on time puts you at serious risk of losing your checks. The process also includes medical exams with SSA-approved doctors. If you are scheduled for one of these consultative examinations and fail to attend without rescheduling, your benefits can be suspended. The agency usually sends multiple notices, but if you never respond, the decision will not go in your favor. The best practice is to keep every piece of SSA mail. Respond immediately, and if you can't attend an exam or need more time, call to reschedule before the deadline passes. It may sound simple, but one of the most common reasons for suspended benefits is returned mail. If SSA letters come back marked undeliverable, the agency may freeze payments until they can verify your new address. To avoid this, always update your address, phone number, and bank account information as soon as anything changes. The SSA also cross-checks with IRS records, so filing taxes, even if you don't owe, can keep your contact information current. This problem is especially common among people experiencing homelessness or frequent moves. If you don't have a permanent address, consider using the address of a trusted relative, an authorized representative, or a representative payee. For SSI recipients, living arrangement changes must be reported right away because they can affect your payment amount. Something as simple as not updating your mailing address can create an overpayment or even a full suspension if SSA assumes you're unreachable. For non-citizens, immigration status directly affects benefit eligibility. If you lose lawful status or are deported, your benefits can be cut off immediately. The Supreme Court case, Fleming versus Nestor, made it clear that Social Security benefits are not a guaranteed property right, but rather a statutory entitlement. That means Congress has the authority to change the rules, and individuals who are deported cannot claim permanent entitlement to benefits they once earned. This is important for non-citizens who worked and paid into the system for years. While it may feel unfair, the law is clear. Benefits can be restricted based on immigration status, and the SSA enforces this strictly. If your immigration status is uncertain, it's important to seek advice from an immigration attorney and notify SSA of any changes so your record remains accurate. Failing to maintain lawful presence means losing eligibility, regardless of how long you worked or contributed. If you are incarcerated for more than 30 continuous days after a conviction, the SSA is required to suspend your benefits. This applies to retirement, SSDI, and SSI, though the reinstatement rules vary by program. The reason is simple. The government is already paying for your housing and meals in jail or prison, so they will not send you a Social Security check on top of that. Once you're released, you can usually apply to have benefits reinstated, but it may take time to process. Certain convictions carry even harsher penalties. Crimes like treason, terrorism, or sabotage can result in permanent disqualification from receiving Social Security benefits. Even parole or probation violations can cause a suspension until the issue is resolved. If you expect to serve time, it's wise to notify SSA in advance and prepare documentation for reinstatement once you're out. Re-entry programs often help with this, but the key is knowing that incarceration beyond a month means your check will stop until further notice. SSI recipients face some of the strictest rules in the program. To remain eligible, countable resources must not exceed $2,000 for an individual or $3,000 for a couple. Countable resources include things like cash in the bank, secondary vehicles, or non-exempt life insurance, while your primary home and one vehicle are usually excluded. Any excess assets can trigger suspension. Even lottery winnings or cash gifts can cause you to go over the limit, at which point your benefits are stopped until you spend down properly. Earnings from work are another big factor. The substantial gainful activity limit for 2025 is $1,620 per month for non-blind individuals and $2,700 for those who are blind. If you earn more than this, you may no longer qualify for SSDI or SSI cash benefits. While some exceptions exist, such as trial work periods, the safest approach is to report all wages immediately and keep copies of your pay stubs. Failure to do so often results in large overpayments that must be repaid. Household changes play a major role in SSI eligibility. The program uses a process called deeming, which counts part of a spouse's or parent's income and resources as available to the recipient. If you get married to someone with higher income or savings, your SSI may be reduced or even eliminated. Failing to report these changes creates overpayments and can lead to suspension. Divorce, a child leaving the household, or even moving in with someone else can also change the benefit calculation. In addition, moving into a nursing home where Medicaid pays more than half of the cost can reduce or stop SSI payments. These are not optional reports. You are required to notify SSA within 10 days of the month when the change happens. The best practice is to keep documentation of every report you make, whether it's a copy of the form, a receipt from SSA, or a written record of the phone call. Household changes are one of the most common reasons for overpayments, and they can be avoided by timely reporting. SSI recipients are not allowed to be outside the United States for more than 30 consecutive days or a full calendar month. If this happens, your SSI benefits will stop. To regain eligibility, you must return to the U.S. and remain for at least 30 consecutive days before benefits can be restarted. Retirement and SSDI recipients generally keep their benefits overseas, but there are exceptions depending on the country, so it's always wise to check with SSA before making extended travel plans. This rule often surprises people who travel to care for relatives abroad or who relocate for long periods. Missing this detail can lead to a sudden loss of income. If you're on SSI and planning an extended trip, notify SSA before you leave, and make sure you understand the 30-day rule. For retirement and SSDI, the restrictions are more flexible, but certain countries remain off-limits for payments. Always check the official list of countries where payments cannot be sent before finalizing your travel plans. The SSA has the legal right to request financial records and information about your living arrangements to ensure you're receiving the correct payment. If you refuse to provide bank statements, lease information, or other requested documents, the agency can suspend your benefits until you cooperate. This is especially important for SSI recipients because their benefit amounts depend heavily on both income and living arrangements. To avoid problems, keep at least 12 months of bank statements and track any major changes in income, resources, or housing. If SSA asks for information and you already have the records ready, it speeds up the process and protects your benefits. If a bank no longer has older statements, and you do, provide them immediately. Refusing to comply gives SSA the legal authority to stop your benefits until the required proof is supplied. Unexpected financial windfalls are another quick way to lose benefits, especially SSI. Lottery winnings, casino jackpots, lawsuit settlements, inheritances, and even large cash gifts are counted as income or resources. If they push you over the $2,000 resource limit, your benefits will stop until you spend down and report the details to SSA. Documentation is critical here. If you don't track how the money was used, you may face penalties or longer suspensions. For SSDI and retirement beneficiaries, winnings don't directly impact eligibility, but earned income from work still does. Always report income promptly and keep all pay stubs or wage reports. For SSI recipients, even a one-time gift of cash can cause problems, so it's important to notify SSA right away and ask about spend-down options. This ensures that you remain in compliance and can have your benefits restored more quickly after receiving a windfall. As you can see, there are many reasons why Social Security benefits can be stopped, some obvious, others less so. The biggest categories are legal disqualifiers like death or certain convictions, financial limits such as SSI resource caps or SGA earnings, and non-compliance issues like failing to respond or provide documents. The good news is that most of these can be avoided with careful planning, timely reporting, and prompt communication with SSA. If this video helped you understand the risks and how to protect your benefits, please give it a like and subscribe to Social Security Post. And remember, your questions and experiences matter. Leave a comment below with the topics you want me to cover next, and I'll do my best to explain them clearly in future videos. Staying informed is your best defense when it comes to keeping the benefits you've worked so hard to earn.